Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Sergey Nazarov, co-founder of Chainlink. We're going to discuss the growth of DeFi. Sergey, it's great to see you again. Welcome back to Trade Talks.
Thank you for having me.
All right. And Sergey, let's talk about DeFi, what it is and how does Chainlink secure the growing $65 billion plus in DeFi markets?
Sure. So DeFi is an alternative to centralized finance, which has traditionally taken people's assets, given them very little transparency about the risks or what's being done with those assets, and is now starting to give them sub 1% yield while exposing them to greater and greater counterparty risk. Decentralized finance is an alternative way of building financial products on highly transparent and globally accessible blockchain systems that enables the complete control of an asset by its holder under all circumstances, complete and total transparency into the asset's current holdings and exposure to various risks with full transparency, and yields anywhere from 5 to 10%, depending on the protocol that you're using. So it's clearly, on many key dimensions, a superior way of building financial products, and something that I think is going to keep evolving and growing in market share. What Chainlink does in the decentralized finance world is provide key infrastructure. And that key infrastructure is basically the ability to prove what's going on with decentralized financial products and generate, the assurances and reliability that they require to prove key properties to their users and make themselves useful.
Sergey, how should banks and fintechs prepare to interact with DeFi?
I think that banks and fintechs are fundamentally driven by user demand. And if the features and positive properties of DeFi that I just mentioned exist, then users will naturally demand greater yield, greater control, and greater transparency to better manage risk. What banks and fintechs can do with their existing user relationships and interfaces is provide access to all of those benefits by basically giving their users an ability to interact with various DeFi protocols that provide all of this value. I think that fundamentally the banks and fintechs that do this sooner are the ones that are going to be in a better position to benefit from this new way that the internet is affecting what users demand from them and essentially what they will have to give users at a certain point.
What are the factors that you think will accelerate the adoption of DeFi?
There's really two cases for the acceleration of DeFi. One is the slow case and one is the fast case. In the slow case, you basically have people gradually realizing the benefits of DeFi, and that'll partly be accelerated by small or medium-sized events such as Robinhood that generally are about the centralized financial system not working the way people think it works or it not meeting their expectations. And while traditionally people have only had the alternative of going to another equally centralized and equally unreliable resource for financial products, now they'll be able to go to a decentralized alternative that has all these great properties. The fast case is one where a lot of that happens all at once. So if there's a global market correction and the stress on the global financial system begins to expose the issues of solvency, overextension in terms of risk, and the exacerbation of inflation, then there will kind of be a massive demand for a superior alternative that provides yield to combat inflation, provides an ability to control one's assets regardless of counterparty risk, and provides transparency that allows the management of risk in a proactive basis without having to depend on counterparties sharing or not sharing information with you.
And Sergey, to wrap up here, beyond finance and DeFi, what do you see as the next industry to be revolutionized by hybrid smart contracts?
In insurance, in terms of what I've seen, is a very important global industry that underpins a huge amount of how the world manages risk and the type of activities that people can commercially do. And I think it's kind of there in the background, allowing a lot of activity to occur. In fact, the ability to even sail across the Atlantic Ocean is based on there being an insurer who can minimize the risk of whether or not you can transport yourself or your goods or the first 3 ships that went across. At the end of the day, decentralized insurance fundamentally solves the many trust issues that keeps insurance both from being made available in the developed markets, but more importantly in emerging markets where there isn't a legal system that allows insurance products to exist at all. I think the ability to take parts of the world from 0 to 1 in terms of risk management, for example, for things like climate change or drought, through crop insurance related to weather, these types of examples, I think, will be quite meaningful in the impact that they will have not only on commercial aspects of people's lives, but really just how the world is able to cope with various new risks that are appearing, not just in developed markets, but in emerging markets.
All right, Sergey, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
It's my pleasure. Thank you for having me.